Everyone. Good afternoon on this Thursday. We will be starting in about a minute, just giving people an opportunity to get in and get settled in. All right, Ashby, can you hear me?
I can hear you just fine. Can you hear me okay?
Yep, sounds good. Let's go ahead and get started. So, good afternoon, everyone. Today, we are looking at doing a very important webinar, and especially if you're a Virginia business owner, this is essential and very critical for the 2026 year. So we're going to talk about a few different things, but we will be making sure, first of all, you look at why you need a family office now more than ever before. So this is the case for one team, one table, a plan that finally talks to itself, right? And it's coordinated effort. Jay, are you able to mute yourself? Perfect. Thank you. All right. So let's get started. So for today's agenda, we want to cover three different parts. One is the big picture, why the old fragmented model is failing business owners, right? And what an integrated family office changes in six different areas. I'll be covering that. I'll briefly be covering that. And then we'll be handing it over to Ashby to really talk about the mandate up close. The Virginia's new retirement rules, your deadlines, and the choices every covered business now has to make, right? It's a requirement. And then we want to leave some room and time at the end for your questions in a Q&A that either Ashby or I will be happy to answer. So with that, I'll get started. Now more than ever before, running a business has just gotten more complicated. And, with tax law changes, compliance obligations, financial decisions happening faster, and the need to make financial decisions faster more than ever before, it's just compounding and creating a lot of complications for business owners. But at the same time, the way that most owners get help and support hasn't really changed much in decades. And so you tend to have what we call as a silo problem, where there's a different professional for every problem, and they're looking at it in their own silo. But what's right for you as the business owner? What's the decision? You end up having to be the one that's trying to piece all of these pieces together and look at the big picture and make decisions, right? And when your time is the most valuable, right? And so today's conversation is an example of that, of how Virginia businesses are going to be pulled into a single new retirement rule this year alone, right? And most people tend to have 5 to 6 different professionals, whether it's a CPA, an attorney, insurance agent, uh, a bookkeeper, an advisor, a banker, um, and they tend to have really great people in those areas, but how often are they talking to each other? And what is that costing them, right? And you, of all people, on top of making decisions for your business day-to-day operations to growing your business, you're now expected to make sure all of them are coordinated as well too, right? And so this is a paradox that that needs to be solved, right? And this is where Cutini and Cutini sort of comes in, because the hidden tax is really when you're doing things in silos. So one of the areas that I believe is the most important for business owners is actually coordination, right? And coordinating of all of the activities so that nothing falls through the cracks. And most business owners are focused so much, including myself at one point, is that we're focused so much on growing the business and building up the base in the business that we don't necessarily look at all the other areas, and most people don't build wealth outside of your business as well too. So when you have that, then you have what I call as the silo tax, right? So this is really important to address. You got into entrepreneurship and business ownership not only for earning money, but really most people do it for being able to have the freedom. So the really interesting thing is the first family office was created in 1882 by John D. Rockefeller, and he had a variety of different professionals that were giving him conflicting information, and so he didn't know which was right for him. So he had a real estate broker, he had an insurance person, he had a tax person, attorney, but what was right, right? And so he decided to bring all of these individuals together. In one coordinated fashion for his family, the Rockefeller family, and they had only one primary objective, which was to grow and build their wealth, right? Now, it was extremely expensive to be able to afford to hire the best experts in each of these arenas and have them work for just one family, right? And that was typically reserved for the 1%. And this concept became very popular, though, even though it was very expensive amongst the billionaire community. Now, over time, things have changed, and we were able to stray true to Rockefeller's original intent of bringing multiple disciplines together, but at a fraction of the cost. So we are what we call as a virtual family office, and we really leverage technology to be able to bring that same type of model, same type of relationships, intellectual capital, and strategies to first generation wealth builders. So it's now accessible, I would say, to business owners that are earning more than 500K a year. You absolutely should be talking to us. So with that, I'll just talk about, we're a non-traditional proactive planning family office. We focus on 6 primary areas: advanced tax strategy, wealth management, risk management, legal services, business advisory, and lifestyle concierge. And we'll talk very quickly through those. When it comes to tax strategy, there's over 80,000 pages of the IRS tax code. A traditional CPA, nothing against them, there's 2 different types. There's tax compliance and filing, and then there's tax planning. Traditional CPA typically utilizes anywhere between 2 to 5%. Whereas we have specialists that focus on understanding the other 95 to 98% of the tax code. And just to give an example of what that can look like, really quickly, some just case studies around that. You know, one business owner, these are real life scenarios. We've, of course, taken out their personal identifying information to protect their privacy, but these are real scenarios. So we had a business owner with about $1.9 million of income, and he wanted to reduce his taxes, and he had been with the CPA for over 30 years. And we got introduced to him by a bank, and the bank said, hey, they were looking at this, and so we talked to them, and we were able to reduce their taxes by $333,000, right? So it's a pretty significant impact. But a lot of people think it's only for business owners, right? It can be for W-2 earners as well too, right? So there's a lot of strategies that are available for W-2. We had a high income earning W-2 individual that we were able to save about $345,000, right? The idea is if you're a W-2, you can save on taxes, but when you're a business owner, you actually unlock a lot more capabilities as well too, and strategies. And this is just to give you an idea of the art of the possible of what can be done. And of course, when it comes to capital gain, there's a tremendous amount that we can do if somebody's exiting and selling a business. The other area is risk management. Every business has some form of risk. We always like to plan for the best, but how many of us are preparing for the worst? Right? And as business owners, we need to make sure that we are looking at all different aspects of risk in a business, but not only just in a business, but individually as well too. And we believe in what we call as the SWAN philosophy. Coined that term in one of my books. It stands for sleep well at night, right? So we plan for the best, but prepare for the worst. And the third area is legal services, right? It's really important for us to be able to have succession planning if we're having a business. We need to have a business financial power of attorney. We need to have estate documents as well too. So many people that I see that are single business LLC owners and they don't have a business power of attorney. And so that puts the business at risk if something happens to that individual. But there could be a lot of other areas in legal services that are needed. But really, it's to make sure that whatever you do in terms of legal services, that you don't want to do that in a silo. You don't want it to impact your other areas as well. And the fourth area is about growth, business advisory. There can be many different things. That doesn't always mean getting more and more clients. It's also about how do we increase profitability? How do we improve our strategy to increase cash flow? There can be things that can be done. How do we mitigate risk? And what's our ultimate goal? And how do we build a value or enterprise value within our organization? And look at what the end is in sight. Are we looking at succession planning, exit planning? What are we looking at, right? So we got to keep the end in sight. And, as I mentioned, wealth design is extremely important. Most business owners, 70% of business owners, their wealth is tied into their business, right? But between 70 to 80% of businesses that are listed don't actually sell, right? So if this was your retirement plan, but it doesn't sell, what does that mean for your retirement? So it's really important to be able to start building wealth outside of your business. And that's one of the reasons we're going to talk about retirement strategies. And last but not least is, you've done all this work to be able to grow and build your business. Isn't it time that you also enjoy it a little bit? And, what is your most valuable asset? It's time. Everything else can be earned, but time is the one thing that you can't get back. And so we want to make it as easy as possible when it comes to any aspect of lifestyle that you want to be able to have. So with that, we call that bringing it all together. Again, as I mentioned, it's SWAN strategy. It's being able to sleep well at night to make sure all of these areas are not done in a silo and nothing falls through the cracks. So this is really quickly some stats that we've had. We're in all 50 states. I've been in business for over 20 years. Average client saves 54,000. And we really believe that the ROI is priceless because we want to bring value in the multiples. So, which brings us to where the primary focus of today's conversation is, right? That it's a decision that you may already be facing, but you don't know that you had to deal with this. So Virginia just changed its retirement rules, and roughly 35,000 businesses are newly covered. And the deadline is this fall, right? So I want to really hand this over to Ashby to sort of walk through the mandate that for all Virginia business owners. So Ashby, over to you, and then we'll be back together with questions at the end.
Okay, well, thank you so much, Pavan. I really appreciate your time, and thank you everyone who has joined the webinar today to learn more about the new Virginia employer mandate that went into effect July the 1st of this year. I'm going to go ahead and share my screen with the slides. Okay, do you see the slides now? Okay. Well, perfect. Yeah. Again, thank you everyone for joining. And Vaughn mentioned, Swan. If you're a business owner, you have to deal with a lot. With employees, with additional regulations, and especially with this new Virginia retirement mandate that went into effect July the 1st, where 36,000 employers in the state of Virginia are going to be impacted by this new mandate. We're here to educate you so you can sleep well at night. So that's really the goal, to educate you so you understand this new Virginia Retirement Plan Mandate, to walk you through what it entails, to talk about, qualification for businesses that could qualify under this new mandate, and to give you the resources so you can make an informed decision before the required deadlines towards the end of the year, which I will discuss. So why did Virginia, and in addition, why have other states mandated retirement plans? Really, the savings gap, retirement savings gap for so many individuals, it's real. About 1 in 5 or 20% of Americans age 50 or older, they have no retirement savings at all. And, those individuals who are relying on Social Security will, in many ways, struggle in retirement if they don't have any retirement savings, because especially with the, cost of living increasing every year in inflation as well, it's been, very challenging for a lot of retirees who are only living on a fixed income, such as Social Security. So Virginia and other states have mandated employers to offer some type of retirement savings program for their employees to really help reduce that gap of 1 in 5, or only 20% or so of Americans have sufficient retirement savings so they can retire comfortably. In addition, what the employers that offer a retirement plan, the employees are much more likely to save if it's offered through a payroll deduction program through their employer. And so far, Virginia was the 7th state in the U.S. to adopt an automatic mandate or automatic IRA program for their employers. It started in 2023. Employers who had 25 or more full-time equivalent employees, the businesses actually fell under the first round of the mandate several years ago. And effective July the 1st of this year, Virginia has implemented a new mandate, which I'll go into in a minute, where smaller employers that have 5 or more employees are going to likely fall under this mandate. So what changed at the beginning of the month? So before RetirePath Virginia, which was implemented several years ago, 25 or more employees in the state of Virginia who had Virginia income, and only full-time employees who work 30 hours or more were counted as eligible employers under this RetirePath Virginia program. Smaller employers that had a fewer number of employees were actually exempt from the first round of RetirePath Virginia. But effective the beginning of this month, the threshold has dropped significantly from 25 to 5. So now any employer that is in that threshold between 25 employees and 5 employees, they're likely going to be part of this mandate towards the end of the year. And one of the other changes that went into effect is now part-time employees are now counted towards the coverage for RetirePath Virginia. And as Pavan and I mentioned earlier, about 35 to 36,000 employers in the state of Virginia and about 350,000 employees are going to be expected to be covered under this new mandate. And employers who are within this mandate, they're going to start receiving a unique access code in mailings from the state, where they have to go and register to see if they fall under this mandate. So what employers must act this year? So an employer that has 5 or more eligible employees in the state of Virginia are likely going to fall under this mandate. And what is considered an eligible employee? An eligible employee, they're generally age 18 or older, and they receive wages in Virginia. And the eligible employees also include part-time employees under the new expansion of the program. In addition, employers who have operated in Virginia for 2 years or more meet that requirement. So newer businesses that are established within the past year or so are likely going to have to, have to wait until next year to actually fall under this mandate. But still, I would recommend that if you do receive the unique access code, go to the website to see if you qualify. If you are an employer that currently offers a retirement plan for your employees, you're likely going to be exempt from RetirePath Virginia. And a retirement plan for your employees includes a 401k plan, a 403b plan if you're a nonprofit organization, a simple IRA retirement plan, or a SEP IRA. So if you do currently offer a retirement plan, you still likely have to go to the RetirePath Virginia website and certify an exemption from this mandate. So the deadline's already set. It went into effect, the program went into effect for the new mandate July the 1st, and effective September the 30th of this year, the deadline for smaller employers that have between 10 and 24 employees. So if you fall within this category, the deadline to register is September the 30th of this year. And then for smaller employers who have between 5 and 9 employees that are qualified, you have until October the 30th of this year. But regardless, if you're within this small employer range, you're going to have to make a decision by the end of the year, by October 30th, or you're not going to meet the required deadline. And if you do not meet the required deadline for RetirePath Virginia under this new mandate, there are penalties for non-compliance, which could be up to $200 per year per eligible employee. So if you do qualify under this mandate, you do not make a decision or register, there could be some pretty significant penalties for non-compliance. How does RetirePath Virginia work? How it works, it's a payroll deduction IRA, a Roth IRA for employees. There is no employer matching contribution allowed. For RetirePath Virginia, it's only payroll deduction contributions going to a Roth IRA by default for the eligible employees. The employees will automatically have a payroll deduction of 5% of their pay going to the Roth IRA, the default Roth IRA. And the employees can also elect a pre-tax or traditional IRA instead if they do not want to go the default Roth IRA route. For the employers, minimal to no employer fees, no fiduciary responsibility. You do need to still register for the program or the mandate. You need to work with your payroll provider if you're working with one, or if you're doing payroll in-house, you have to make sure you have payroll ready for RetirePath Virginia, and need to submit the employee contributions if you decide to go this route. The going back to the fees, the employer again does not pay the fees for RetirePath Virginia. The employees do. It's paid from the eligible participants' accounts, not by the business. So, what does RetirePath not do as compared to other retirement plans for employers? Again, there's no employer contribution or no employer matching allowed. So it's only employee payroll deduction going into that default Roth IRA or a pre-tax IRA if the employee decides to make pre-tax contributions. IRA level contribution limits are much lower than contribution limits for a 401k plan or a simple IRA plan. And then Roth income limits for individuals who are high earners might be restricted from Roth contributions through RetirePath Virginia. Under the 401k plan or a simple IRA plan, there are no income limits for Roth IRA contributions, regardless of how much individuals own. So that's something to consider, especially for business owners who are high earners and are looking to save as much as they can for retirement. Maybe RetirePath Virginia is not the best solution for you. So there are three paths to compliance, either September 30th or October 30th of this year, depending on the eligible employees that you have with your business. One, you need to retire. You need to register for RetirePath Virginia if you meet that mandate. Again, there's no employer cost, no employer contributions or matching. You can offer your own retirement plan for your employees, such as a simple IRA, 401k, or a SEP IRA. Or if you already offer a retirement savings program for your employees, you can certify an exemption. Why is now a really good time for smaller employers to consider setting up a simple IRA or a 401k plan? Going back to my earlier comments, one, employees can save more in simple IRA plans or in 401k plans as compared to RetirePath Virginia. Two, there's no income limitations for Roth contributions in a 401k plan or in a simple IRA plan. Three, employers can offer matching contributions or employer contributions to really attract, retain, and reward your employee base and attract those key employees to help you continue to grow your business. But in addition, and more just as important, is the government is now offering tax credits to incentivize smaller employers to offer retirement plans for their employees. So I'll give you an example. If a smaller employer sets up a 401k plan, they can potentially receive a tax credit of up to $5,000 a year for each year over 3 years for qualified setup, administration, and other costs for setting up, especially a 401k plan. In addition, there are more tax credits available if you do make employer contributions to individuals or employees who make wages of $110,000 or less in 2026. In addition, if you implement automatic enrollment, where employees are automatically enrolled into your retirement plan, such as a 401k plan, there's an additional tax credit of $500 on top of the startup cost credit and the employer contribution credit. So with the tax credits alone, it could be very significant for offsetting any startup costs of a retirement plan. And there's one other tax credit as well, is the military spouse credit, where there's an additional up to $500 credit on top of the other tax credits that I've mentioned. And if you do go the RetirePath Virginia route, there are no tax credits that are available to you as an employer. So the tax credits are only available to employer-sponsored retirement plans, such as a simple IRA plan, such as a 401k plan, or another retirement plan, such as a SEP. So timing does matter for setting up a retirement plan, because with the contribution credits for the employees who make $110,000 or more or less, the contribution credits are phased out over time, and they step down over a 5-year period. The first 2 years, up to 100% contribution credit for those qualified employees. And then year 3, year 4, and year 5, those credits actually step down over that period of time. So once, as you're considering a retirement plan for your employees, either under RetirePath Virginia, or evaluating setting up an employer-sponsored retirement plan, such as a 401k plan or a SEP or a simple IRA, really factor in how beneficial the tax credits could be to your business, to help offset, a lot of the setup costs and startup costs of a 401k plan. So really take that into account when you're evaluating if RetirePath Virginia is the best route for you, or offering your own private employer-sponsored plan like a 401k plan, because in many ways, the tax credits that are available over a 5-year period can be pretty meaningful for many employers. So that's something you definitely want to consider before making a final decision about what route you're going to go with a retirement plan for your employees. So just to give you, an example, a hypothetical example, if you have about 8 to 10 eligible employees, all under the wage limit of $110,000 this year, you start up a retirement plan such as a 401k with sufficient startup costs. You implement automatic enrollment, that additional $500 tax credit, and you contribute at least $1,000 per eligible employee, those employees who make $110,000 or less. Year 1 potential tax credits available to your business could be, between $10,000 and $13,000. So that is definitely something that could be meaningful. It's not a tax deduction, it's actually a tax credit to help offset some of your tax liability. So in many ways, again, as you're evaluating setting up a retirement plan and what route to take under this new mandate, factor in available tax credits for establishing a retirement plan, because you might be very surprised as how these tax credits can meaningfully offset any costs for setting up a private retirement plan, such as a 401k plan. So really, what path could be best for your business? One, RetirePath, if you just want, no cost, no administration besides the payroll deduction. If you're okay with the employees having a lower contribution limit, the IRA limit, and really, if you're an owner of a business and you're not looking to provide an employer matching contribution, and you're not looking to really help maximize your retirement savings, RetirePath Virginia could be a good option for you. But if you are looking to recruit, retain, and reward employees potentially receive those tax credits to help offset a lot of the startup costs for a retirement plan. A private plan such as a 401k, such as a simple IRA or a SEP IRA, could really be a good option for you. If you own a business, if you're looking to reward your employees, provide an employer matching contribution, potentially with discretionary profit sharing contributions on top of the employer match, really could be a good way for you to really retain your workforce and go out and be competitive in the marketplace by offering a very attractive retirement plan for your employees. So really, what are the next steps for you? Look out for the notices from the state. You're likely going to receive a mailer and an email with a unique access code. You need to kind of confirm if you're eligible under the deadlines, either September the 30th, if you have between 10 and 24 eligible employees, and then October 30th, if you're between 5 and 9 eligible employees. You have to make a decision by these deadlines. And you want to, evaluate your options. Is a 401k plan with an employer match, is that going to be a good option for you and for your employees? Partially offset by the tax credits. A simple IRA or other employer-sponsored retirement plans. It's good to think right now what option could be the best for you and your employees, because September 30th and October 30th is going to be here before you know it. So if you make those informed decisions about which route is best for you, you do have some time, but you need to be aware that September 30th and October 30th are quickly coming around the corner. So now is the time to evaluate what option is best for you, explore the tax credits that could potentially be available to you to offset some of the startup costs of a 401k plan, and make sure that you are compliant, because again, if you are not compliant by September 30th or October 30th, could be up to a $200 penalty per employee per year for non-compliance. So now is the time to consider your options and make an informed decision. And my team is here to help. If you have any questions, if you want to evaluate and compare and contrast RetirePath Virginia to a 401k plan, to a simple IRA, and see what option is the best for you, reach out to us. You can go to Ashwood Financial Partners. There's a button on our website. Click on Let's Talk. Me and my team are open to having a conversation with you to help you make an informed decision, so you understand any potential tax credits available to you. You understand any potential retirement savings enhancements by offering a retirement plan, or if you just want to kind of evaluate your options and go the RetirePath Virginia route. My team is here to help you and be a resource for you. So would welcome your time, and would welcome the opportunity to explore all options with you so you can make an informed decision. And with that, I will open it up to questions.
Fantastic. I appreciate that, Ashby. I think that was really informative, something that's critical for all of us as business owners to be thinking about. So with that, as Ashby mentioned, it's very important to be proactive. Don't wait till the last minute in taking action regarding this. And if you don't have a retirement plan set up and you have more than 5 employees that are above 18, take action, right? And so it's really important to stay compliant. I believe Virginia is going to take action against it after you pass the deadline. So please make sure that we're being proactive about it. on the slide, we do have the contact information for both of us. So whether you're looking at specifically just for the retirement plans, you can talk to Ashby. If you're looking for the coordination or even about how to coordinate with Ashby about the retirement plans, feel free to reach out to us as well too. And so appreciate everyone taking their time on Thursday evening to be able to talk to us and hear and get educated about the silo problem, the fragmented problem that most business owners have, and what the solution could potentially be with the family office at a fraction of the cost. And then also understanding the compliance and regulation with the retirement path. So let's open up to questions. Let's take a look. Jay, do we have anyone here for questions or any questions?
What I see is somebody in the chat who says, wanted to know if they will get a recording of this.
Yeah, happy to share the recording of this.
I do have a question if that's the only one I see in the chat.
Yep, go ahead.
It says auto enrollment to Roth IRA, if I understood you correctly, Ashby, and you're nodding yes, so I guess I did. That's great. Is there a way to determine where my money goes, or is that somebody else's decision? You know, what funds and things it gets invested in?
There is a way. So if you are an employee and contributing 5% into your Roth IRA through RetirePath Virginia, you do have a list of investment options available to you. So you do have that option to select your own investment within RetirePath Virginia.
Thank you.
Absolutely.
I'm not seeing anything else in the chat, so I will ask another question.
Absolutely.
It says, again, Roth IRA by default, but it says people can opt out. If they opt out, will that make the employer non-compliant?
No, that will not make the employer non-compliant as long as they offer, RetirePath Virginia to their employees. If they go this route, they still have the option to opt. The employees have the option to opt out, and because they were given the option to actually contribute, the employees were given the option to contribute to RetirePath Virginia, but those employees opted out, they will still, qualify and be compliant. And even for a 401k plan, if you implement automatic enrollment to all of your employees in a 401k plan, the employees can also opt out and not participate in the 401k plan or in a simple IRA plan. So it's up to the employee's discretion if they want to contribute to RetirePath Virginia, to a 401k plan or a simple IRA plan.
So if I understood you correctly, they will be auto enrolled, but they can then opt out, but they just have to be aware of all of this.
That's right. That's right. Yeah, they can opt out, and they just have to, like, all the employees have to be provided the option to actually contribute. So, RetirePath Virginia is voluntary for the employees. So the employees can opt out online, they can call, or they can mail in a opt out form. So, if they do that, if the employees go one of these routes, they do have the option to not contribute or participate in RetirePath Virginia.
Okay, so if they want to opt out, they would then do it through RetirePath Virginia, not through their employer.
That's right. So the employers provide the opt-out information to all the employees who are eligible under RetirePath. but it's the responsibility of the employee to contact RetirePath to opt out. It's not the employer's responsibility.
And this again makes the plan very simple for small employers.
That's right.
Yep, I've been listening. And not seeing anything in the chat, I'll ask one more. Um,
Okay.
let's say I have one full-time employee and four part-time employees. Four and one adds up to five. Am I still obligated to do this?
So with the part time, if they qualify, if they're at like 90 or more, if they fall under the threshold, at least 18 years or old or older, they receive income in the state of Virginia. If they're employed in another state and do not receive income in the state of Virginia, those are not considered an eligible employee. But yeah, all the employees who are not 1099 or independent contractors, who are at least 18 years old or older and receive Virginia income and are taxed on Virginia income, then those employees are considered eligible.
Okay. I think you've answered all of my questions, so thank you.
And one question I had, Ashby,
And
is
I just wanted to clarify one thing. So Jay, if they're like temporary or seasonal and they work, less than 90 days a year, they can open the RetirePath account independently, but they're still going to be eligible for RetirePath under this mandate. So they can actually, seasonal employees are eligible, and they can, go through their employer or open a RetirePath account themselves.
All right.
one question I had, Ashby, is what about if there's contractors, right? 1099s, right? That five is only for W-2, correct? And not 1099s and contractors.
Right. No, so independent contractors, 1099s, are not considered eligible employees.
Yep, perfect. Very
But
good.
the independent contractors and the 1099 employees, they can enroll and contribute on their own through RetirePath Virginia.
Awesome. Awesome. Well, Ashby, it's been fantastic. Thank you for taking the time to educate the community on this. Really appreciate you and Ashwood Financial Partners. You guys have been great partners with us. We really enjoyed the relationship. If anyone that's listening has further questions, please reach out to either Ashby or myself, and we'll make sure we get that answered. Thank you, everyone, and have a great day.
Yeah,
Cheers.
Thank
thank
you
you,
both
everyone.
very
Look out
much.
for these notices too.
That's right. That's right. All right.
Thank you both. Very informative on both areas.
Fantastic.
Yes,
Appreciate it.
thank you, and thank you everyone for joining today. Vaughn and Jay, I really appreciate your time and appreciate this opportunity as well.
Absolutely. Absolutely. Cheers.
Cheers. Have a great day.